In today's market update, I'm going to be discussing the possibilities for the position of the 80-day cycle trough in the S&P 500 again. My name is David Hickson. Today is the 14th of August 2019, and I must ask you to make sure that you have read and understood these disclaimers. So here is the analysis that we've been looking at in the S&P 500, and if you haven't watched the previous videos in this series of market updates, I would encourage you to do so that you know what I'm talking about and so that I don't need to repeat myself too much. You will know that in the previous market update, which I recorded on the 8th of August, this bar over here, I recorded it fairly early in the day, I was speaking about the fact that I was expecting another interaction between price and this purple line, which is of course the 20-day FLD, before the formation of the 80-day cycle trough. But as you will know from that previous market update, it was also possible that the 80-day cycle trough formed on the 6th of August, and that the expected interaction between price and that 20-day FLD was something that simply failed to happen, or perhaps happened over a weekend or in a manner that didn't make it very visually obvious. So just a reminder of what I was speaking about, we of course track a sequence of interactions between price and the 20-day FLD. Those interactions play out over an entire 80-day cycle, and they are simply labeled from the letter A all the way up to the letter H. The next interaction that I was expecting was where price comes up to the 20-day FLD and finds resistance. In other words, it doesn't tear straight through that FLD and cross over to the other side. It finds some resistance at the level of the FLD. Now, when an FLD provides support or resistance, I often describe it as approximate support or resistance. Sometimes it's absolutely accurate, but much of the time it provides approximate support. So price will rise up to the FLD, cross slightly above it or slightly below it, and then perhaps continue to track along that FLD for a few days before it resolves one side or the other. And so that expected FLD interaction was a G category interaction. Alternatively, if the 80-day cycle trough had indeed formed on the 6th of August, as I discussed last week, then that would have been an A category interaction, which is a very different kind of interaction, because as opposed to the FLD providing resistance to price, we would have expected price to cross over the FLD, because of the fact that price was bouncing up and out of an 80-day cycle trough. It has been an interesting few days in the market. As you can see, price rose up towards the FLD, and on Monday of this week, price dropped down again. I received several emails and some YouTube comments about the fact that the G category interaction I'd spoken about had probably manifested in the markets. Indeed, it looked as if though price had tried to reach the FLD, failed to do so, and was already turning down again. You must remember that an interaction between price and the FLD doesn't necessarily mean that price actually touches or crosses the FLD. It could mean simply that price reaches towards the FLD in an attempt to touch that FLD, but sometimes fails to do so, which is of course interesting in and of itself because of the fact that it reveals the bearishness or bullishness of the market. But when it comes to actually defining the fact that the G category interaction has occurred and the H category interaction is now underway, we are presented with a bit of a problem. How do you do that when an interaction could be simply a matter of price reaching towards the FLD? Well, the way that I do this is I look at an FLD from a shorter cycle, in this case the 10-day cycle, which is that pink colored line there. Now, as a guideline, I use the 10-day FLD as the point at which I can say confidently that the G category interaction is complete and the H category interaction is underway when price crosses down below that 10-day FLD. You can see that what actually happened was that on Monday, price came down towards the 10-day FLD, and on Tuesday, yesterday, price bounced back up again without crossing below the 10-day FLD. And so strictly speaking, we have not yet witnessed the G category interaction and the H category interaction which follows it, which is of course price moving away to the downside from the FLD towards that 80-day cycle trough. And so when the market moved up strongly in the early hours of trading for the US session yesterday and came right up to the level of the 20-day FLD, as you can see over there, I was still not convinced that the 80-day cycle trough had therefore formed on the 6th of August and that we were witnessing the bounce out of that 80-day cycle trough. All that had happened was the price had come up to the 20-day FLD. And so it is therefore still possible that the G category interaction is still at play. Therefore, not very much has changed in terms of what I discussed in the previous market update video. Yes, it is possible that the 80-day cycle trough did form on the 6th of August. And yes, it is possible that price is now bouncing out of that 80-day cycle trough. However, using the evidence that we have in front of us, I must say that so far, this interaction with the 20-day FLD looks a lot more like a G category interaction in which price is finding resistance at the level of the 20-day FLD than it does like an A category interaction in which price is expected to cross above the FLD and move towards its 80-day cycle target. Here is an example of an A category interaction to compare with the current interaction between price and the FLD. Although that is a little misleading because here price was bouncing out of a 20-week cycle trough, so it had a lot more upward pressure, and we would have expected a much stronger A category interaction than we would bouncing out of an 80-day cycle trough, which is not nearly such a strong cycle trough for price to be bouncing out of. And so the bottom line is that yesterday's price action hasn't actually changed the situation in terms of our Hurst cycles analysis. We have no definite answers yet, but we are going to get an answer really very soon. And that depends on what happens in price action now. As you can probably see, I'm recording this video before the US markets have opened. We have a tiny little bit of price action, which is the overnight price action. But I thought that I would record the video now because what happens in today's price action is going to be very telling. If price crosses strongly above the FLD, then we will have the answer that we have been seeking, because then we will say this is most likely to be an A category interaction. On the other hand, if price continues to straddle this FLD, in other words, it doesn't cross strongly above it, but it perhaps drops down again and we get some more price action in the same kind of area, then we will say, no, we still think that this is a G category interaction. I think you can see now why I said in my previous market update video that I would not be jumping into a long trade when price came up to the 20-day FLD, because of the danger that we have a G category interaction that is still unfolding and that the 80-day cycle trough still does lie ahead of us. But we are going to know one way or the other fairly soon. There is something else that worries me about yesterday's price action, and it is worth mentioning here. And that is that the strong upward move in yesterday's action was achieved in the first hour of trading. And it was volatility caused, in my opinion, because of news. You probably know that there was a news announcement to do with trade with China, and the market moved up in an hour after receiving that news. I've spoken about this before, and it's a very big topic, so there's not enough time to discuss it here. But you'll know that, in my opinion, news causes volatility in the markets. But more often than not, it's a fairly meaningless move. It's a fairly meaningless volatility in that market. And so when I see price moving very strongly following a news announcement, I'm a little reluctant to take that move seriously until the market has proved that actually that move was really a genuine and important shift in terms of the value of the market. Now, I have been looking at this analysis because when you have two possibilities in an analysis, I think it's important to consider the one that you need to be wary of. And in my opinion, the possibility that an 80-day cycle trough has already formed is the analysis we need to be a little careful of. Therefore, I haven't been focusing on the other analysis, but I would like to show it to you quickly. Here is that analysis. And you can see it is the analysis that I've been explaining, which is basically that the 80-day cycle trough still lies ahead of us. According to this analysis, the 80-day cycle trough is probably centered around about the last week of August, which would make it a late 80-day cycle trough. But you can pause the video if you like and look at the details of this analysis. You will see probably that the position of the troughs, although all the cycles are running longer than expected, is slightly better than the other analysis that we've been looking at. The reason I'm showing you this analysis is because the 20-day FLD is in a slightly different position. It is displaced by one more day to the right. And you can see that in fact the position of the 20-day FLD according to this analysis gives us just a little more room for that G category interaction to play out. Let's go back to the analysis we've been tracking. You might be asking, well, what happens if price does cross the FLD at this point and this does turn into an A category interaction, and therefore this was the 80-day cycle trough? Haven't we then missed a great trading opportunity? Well, yes, we might have, but in my opinion, the uncertainties in this analysis don't render it a very attractive possibility for making a trade at this point. What I would choose to do is instead wait until price does cross over the FLD, at which point we would expect it to come back to the 20-day FLD at around about the time that we expect the next 20-day cycle trough, which is in about 10 days' time. At that point, we will have much more clarity about the situation. We will be able to confidently place the 80-day cycle trough, and we will be able to take advantage of the much better trading opportunity, which is the C category trading opportunity. And I would like to show you one more thing before I close this video. Of course, there is an FLD for each and every cycle that we have in our analysis, and it's important to keep an eye on all of them. We've been speaking in great detail about the 20-day cycle FLD, but we need to watch all of them because all FLDs are constantly providing us with information about what is happening in terms of the cycles moving the markets. The FLD that I would like to show you on this chart is the 40-week FLD. Now, I'm sure I don't need to draw diagrams. You can see for yourself the effect that the 40-week FLD has had on price. It has been providing some support for price over the past week or so. The important question at this point is, what do we expect from the interaction between price and the 40-week FLD? Are we expecting the 40-week FLD to provide support for price, or are we expecting price to cross down below the 40-week FLD? I am going to discuss this in a separate market update video, which I hope to publish soon. But so that you have something to think about before you see that video, I will tell you that the answer to that question lies in the longer term analysis of what's happening in the S&P 500. I've mentioned in previous updates that I have a level of confidence of 18 months in this analysis. The answer to what we are expecting in terms of interaction between price and the 40-week FLD at this point lies in the position of the 54-month cycle. And I'm not going to tease you with that. I will tell you that if the 54-month cycle trough occurred in February of 2016, then we would in fact expect price to drop down below this 40-week FLD. And that would indeed be bearish for the market. On the other hand, if the 54-month cycle trough occurred over Christmas of last year, then we would expect the 40-week cycle FLD to provide support at this point. The reason why I'm not going to make this video very long and discuss it in this video is because the 40-week cycle is a really long one, and of course we should really be considering the interaction between price and the 40-week FLD using a weekly chart. Here is a weekly chart, and you can see how price just touched the 40-week FLD, but in terms of its interaction, that is probably only going to play out over many weeks. I do hope that you found this market update interesting. Please let me know if you have any questions in the comments below this video, or send me an email. I always enjoy hearing from you.